Well, I am itching here to get long, and I'll tell you what. I'll tell you why. I just heard a report on CNBC that said there was significant put options that are in the money down here that expire this Friday, and if the market makers take this market higher, those options will be worthless, and that'll make them money. Now, if we break over the 61s, I think considering the I period is opening up in 2 minutes, this market could very well be headed at least to the D high, which is 69. That's an 8-point trade. So we're going to take a look to see if we can't get established long here. We're going to specifically take a look at these pullback columns. We see the negative column, negative 602 on the red triangle, negative 495. If we see some red triangle columns that are reverse columns show positive, and we see some cross trade, we'll take a long position. It would have been nice to take the long position at the low of the H period, which is the 52. But at that point, there was no telling that we weren't going to make lower volume clusters. So we're going to take the 59s here. It looks like it's about to break up. We're going to take the 59s and manage the trade. We don't have a very asymmetrical position. We're not too far from the mean, which means it's not the best trade location, but my intuition tells me that they're going to move this market up, and if they do, the short covering rally could propel us more. And that'll be interesting to analyze the CNBC news with the expiring put options that are in the money currently and see how it affected our trading decision. The I column just opened up. And it ticked down to 58.50. That could very well be the low of the I column. If that's the case and we break over 61.75, there could be a feeling with any shorts that accumulated in yesterday's range or even as high as the 14.18 consolidation, 14.20 consolidation a few days ago, that they could take some nice profit over 60-70 points. That could propel us toward the other end of this daily distribution here. So we'll hang tight. We have our exit strategy, of course, is 1 at 61 and a quarter. Oh, I'm sorry, that's a mistake. 1 at 60 and a quarter. We almost ticked there. A little mathematical error in my mind there. We'll exit 1 at 60 and a quarter. Once we get 60 and a quarter, then we'll put our stop in at hard at 59 and see if we can rally a little bit. Well, there's our fill. It's 60 and a quarter. So we we'll now put our break-even stop in at 59. We pulled 1 and a quarter points out, and we typically put our target. We're going to write our target in here at 64, but I'm going to put a question mark there, and we'll see the intensity of any buying from the 60s up here to the 63s and reassess our exit at 64. And the reason I say that is the D period high is 69.50 and the mean is 63 and change. So we should get back to the mean at our target here at 64, but there's a good chance with short covering we'll get beyond the mean, and the A period high is 1382, significantly above where we are. So unless we get stopped out, of course, we have our stop here at 59. If we do get stopped out, we'll look for a repositioning. Well, once again, we come within a quarter tick of 59. Maybe I shouldn't talk here while we're still trading the 59s, but it didn't tick 59. It ticked 59 and a quarter on the bid. So we'll see and hang tight here. Looks like our stop might be okay. That's if that's the case, that's a lot of times that it comes within a quarter tick. I just don't know what to think about that. I'm hesitant to not put it there because I like taking the first point and a quarter. That guarantees a little bit of money at the end of the day for the most part, and that's a good thing for longevity. So we'll stay here and see if we can't get above this range. All right, there's the 59. The 59 stop took us out of the market with a 1.5 minus commissions, about $55 trade.